or while I'm waiting on everybody to enter the classroom, um, someone from Becker is supposed to be presenting. If that person is here, please message me through chat. Um, and it was supposed to be about a 10-minute presentation from Becker CPA. So we are going to do that first. And I'm going to lecture starting around 5:15 or so. If anybody does not want to participate, they can disconnect and come back at 5:15. Otherwise, it may be helpful for you to hear what the person has to say. But I am waiting. She was supposed to let me know, and so I'm going to give them another minute or so and see if they're going to be joining in. I'm not seeing them in the list yet. So again, I'm not seeing that person. I have not connected. And this Monica, you're not here, right? I'm not seeing Monica. You in the class either. All right. So I think I'm gonna then just continue with the material, and if they log in, then we'll see what we can do in terms of uh, letting them in. And I'll share my screen in just a minute. All right, so we're going to continue with chapter 10, and which deals with purchases and payments processes. And just before I jump into this, I want to make sure you guys are up to date with a lot of stuff that I had posted on Wiley. As well as announcements that I had posted. So it would be a good idea for everybody to take a look at it. I've posted quite a bit of material. So we've had exam 1 and 2, and so chapters 1, 2, and 3, exam 3, and it's telling you when it is due, November 18th. Then chapters 4, 5, and 6, the exam is due on December 3rd. And then chapters 9, 10, 11, 12. So 4 chapters. That is going to be your final exam, exam 5, which is December 17th at 4 p.m. And you'll have 2 hours to complete this exam. So the final exam will be during the final exam week at the official class time on these 4 chapters. So we finished 9 already, 10, 11, and 12 we will be working on. And for the exams, I've also posted under announcements how you're gonna submit exam 2. Basically, you're gonna go in the quiz section and upload the file as an attachment. And exam 3 is scheduled for November 12th, which is on Wednesday. And officially scheduled for November 12th. And I'm going to go back, exam 3. Officially scheduled for November 12th, but you have till the 18th, basically another week almost, a little more than that, to be able to complete it. So it must be submitted, but the official class time is November 12th. So exam number 4 is officially scheduled for December 1st. So if you look at exam 4, you will have till the 3rd to submit it, even though I've scheduled it on 1st. Just again, in case somebody cannot make it that day. And then exam 5, final, I've also posted information about it. So any questions about what I have submitted, let me know. So for the final exam, please make sure you understand that it's on December 17th from 4 to 6 p.m. Exam is not cumulative, it's only these particular chapters. And exam is not going to begin at 5 o'clock. It's going to begin at 4 o'clock. This is the official college schedule. And it's not a 1 hour, 15-minute class. It's going to be a 2 hour class. So again, make sure you look at these things and let me know if you have questions. I'm going to respond. Exams are not timed. So what you want to do is look at it and you can start, stop. You can work at your own pace. So you don't have to do everything all at once. But official class time is from, let me just bring that up. Your official class time is December 1st, which I think is a Monday, and then November 12th, which is a Wednesday. So I will take a look at homework settings, etc. But because of the way I have, book is set up, the way I have deadlines and all of that, if it's not letting you go and look at the answers, then you will not be able to go and look at the answer. I will take a look at the settings, and this is something you want to approach me via email. So if you're not able to see it, but typically they will not become available to you till everybody in the class has taken the exam, and then you're able to review it. If you have specific questions that you want me to address, approach me via email. If it's something that I think will benefit the entire class, I will tell you. And I'll go over it in class, otherwise I'll just respond to you individually. All right. So let me move to chapter 10 and give me just a minute and we get started. All right. So, and by the way, let me do one more thing. In the content section, uh, I'm going to be posting the information from previous chapters. I have it in here. It should be this one, and let me double check. Yeah, so let me bring that up for chapter 4 and for chapter 9 also I have it ready, I believe. And I believe this is chapter 9. Let me just no. All right, I will post it. I thought I had done it, but it's not up there just yet. I did make a mistake. I thought I had it in here. So let's go to, but this one also I will post the PowerPoint material after I am done with the lecture, which will be uh, probably it will take 2 to 3 class sessions for me to finish. I have about 30 pages worth of notes to go through. So it will take probably 3 separate class periods before I'm gonna finish with this. Okay. So chapter 10 deals with purchasing of inventory, how you manage inventory, and supply chain. So this is the purchasing and payment processes cycle. So often these are referred to as cycle, and I'll just add that in there. So this is the cycle we are going to focus on for the next 2 or 3 class periods. So purchasing is also known as procurement, and obviously it's an essential to any business, focuses on acquiring necessary resources for the organization to function effectively. And these processes work in conjunction with payment process. So of course, you're purchasing and then you're paying for something. Works in conjunction with payment processes, which will handle disbursement of funds for acquired resources. So together, purchasing, you're buying things and you're paying for them. This cycle is one of the critical functions and in the information system. So with this basic understanding, we will continue. So what do you go and you purchase? So the stuff that a business is typically purchasing is inventory, and this inventory could be raw materials inventory, it could be purchase work in process, but it could be what we would call finished goods inventory if you're dealing with a business that is a merchandising business. Typically, you're going to buy either raw materials if you're a manufacturing company, and then you start working on it, which we call work in process, and eventually you will end up with finished goods. So this is um, the purchasing process could be raw materials if you're dealing with a manufacturing company, or I'm calling it finished goods, but it's just goods. If it's a merchandising company, you usually will not use the term finished goods. You will just call it goods, as far as this the terminology is concerned. But if if you take cost accounting, if you've taken cost accounting with me or with anyone else, I guess you should hopefully understand these terms: raw material, work in process, and finished goods. So you start with raw materials, then you transform them using labor and overhead. So raw material is transferred into work in process using labor and overhead. And when I'm saying overhead, I mean manufacturing overhead. And then when all the work is done, it becomes finished goods. And most of you, if not all of you, should have taken cost 305 before this. If you haven't, and I need to elaborate on this further, just let me know via chat. Otherwise, I'm going to be moving on. I'll give everybody a minute or so if you have a question. And after that, I'm going to move on to the next section. All right. So at the high level, broad level, that's what we mean, 5 business activities in inventory purchasing. So again, when we are saying inventory purchasing, that inventory could be raw materials inventory, which you are going to transform into finished goods, or it could be just finished goods inventory. So we're just using the generic term inventory and inventory control. So Inventory Control Department will manage inventory levels and bears responsibility for maintaining optimal stock quantities. So this is all coming from Accounting 306 now. In Accounting 306, you should have learned about economic order quantity, which helps you determine the optimal amount of inventory. So that, along with lead time, helps you manage inventory. So the department is responsible, people are responsible for that particular function, and they will make sure that they'll keep track of inventory patterns, forecast future needs, and initiate purchase requisition when replenishment is necessary, when you need to buy more. And you're obviously not going to buy it just when you're out of it. You have to take into account what we call lead time, that it may take a few weeks, months for you to get your inventory. So that is taken into account. Primary objective is to prevent both stockouts, that you don't run out of the stuff, and you don't want overstock. If you have too much inventory on hand, it will increase your carrying cost, tie up your working capital, and in addition, inventory may become obsolete. So what we mean by carrying cost is that when you have inventory sitting in your warehouse, you have to insure it. Now you're paying rent or property taxes on the facility where you're storing inventory. There's the risk of obsolescence, meaning these items are no longer going to be desired, wanted. There's the risk of theft. Somebody might steal it. There's the theft, risk of damage. For example, there may be fire. So all of these are carrying costs, and including insurance that you probably need to keep. So your aim is to keep the just right amount of inventory so operations are not disrupted, you don't lose sales, but at the same time, you don't want to have overstock. And that's why we talked earlier about economic order quantity. What would be the optimal quantity that you want to buy each time you are buying something? So the purchasing department transforms internal purchase requisitions into legally enforceable purchase orders. So we have a department that sees that, okay, we need to buy more parts or more raw material. Well, then you have another department. Their job is to actually order these items. So the purchasing department manager will make sure that we are getting the best price. And so the internal request comes from the first department, the inventory control. They make that internal request. They initiate purchase requisition. What that means is they are going to request, please, we need to buy stuff. And who will actually be buying it? Someone from the purchasing department. So they will transform the request, initial internal request, into a proper purchase order. So it is this department that decides where to buy the goods. It decides how much to pay for the goods. It will ensure that the right quality is ordered. So they obviously right quality and quantity. So they are the ones that will communicate with the supplier and let them send them the purchase order that was generated internally. And once the supplier gets it, then you're entered into a legally binding contract. Now, the supplier sends the stuff to you, they deliver it to you, and that's taken care of by the receiving department. So the receiving department basically will accept deliveries. They will also get supplier generated packing slips. Now, the receiving department will know that we are expecting items, but they are not always told how many items are coming in. So they will know, they will have a copy of this purchase order, which shows them that we are expecting something from our supplier. But often at times, you do not tell the people in the receiving department the exact quantity that you have ordered. Okay. And you have them do an independent count. If you tell them we ordered 12 items, they may not count the items and just say, we got 12 items. So, what you want to do is tell them this and this will be coming, but you don't give them the quantity. You let them count the items and tell you, we received 14 items, we received 10 items, and then it would be reconciled. Their receiving report would be reconciled before you are paying them. So the next department, again, any questions up to this or explanation, please let me know. Otherwise, I'll continue. So the next department is accounts payable. So once you You ordered the items, requested it, ordered it, received it. Now is the time to pay for them. So the accounts payable department, this you should all be familiar with. They're going to basically pay the invoices upon receipt, and they will make sure that the quantity, description, purchase order, the receiving report, they all match before they will make a payment. So you don't end up paying for something. It's possible you received something, but you never ordered it. So you need to make sure that you're reconciling it with the purchase order. Know that you ordered it, then you received it, the quality of which you received, and the quantity that you received. You're going to get all of these items before authorizing payment. And the final part is payment is actually processed for the goods and services, and you update your accounting records to indicate that we have paid off our accounts receivable with cash. Any questions so far? And if you have taken auditing 1 and auditing 2 or auditing 1 at least, you should be somewhat familiar with these items. This is covered in a lot more detail in auditing 2. And most of you probably will be taking it next semester or a semester or so. So this is all covered in a lot more detail in auditing 2. Okay, so the next cycle, the next big part of our cycle is inventory management system. So the inventory management system is going to coordinate everything that's going on with respect to inventory. So this is the accounting system, or sometimes you'll see it called inventory module, inventory management system, or inventory module. It's going to make sure that uh, records are being kept, electronic records are being kept for everything that we talked about already. So how much inventory is available, what needs to be purchased, accounts payable. Obviously, that would be the accounts payable module, but it's tied in to the inventory module. So the two primary inventory management risks, either insufficient inventory, which means you can't sell. And I've already talked about this, so I don't want to spend too much time on it. Or you will have too much inventory. And if you have too much inventory, excess inventory, that means you are increasing your carrying cost and expenses. So key aspects of inventory management or inventory control are supervising all inventory related activities, maintaining items until needed, which means securing them, okay? Proper storage practices, accurate record keeping, and monitoring the condition. And demand forecasting. So when you're doing demand forecasting, you are trying to guesstimate how much you're going to need to purchase, which is all based on how much do you think we're going to be able to sell. So you take into account how much you think you're going to sell, you keep into account how much inventory you want to maintain. So desired ending inventory and sales, expected sales plus desired in ending inventory. That helps you forecast the demand. How much should you be going out and buying? Questions, let me know. And otherwise, I'll move on. and I'm just looking through. I'm going to be skipping a little bit, then I got a little bit of a problem. Okay, so we are not, um, I am not quite sure why my page count is off. Why I was not seeing this. Give me just a second. I was looking at my notes and they were not appearing, at least on my screen. Okay, they're here now. It's just not getting updated in Word for some reason. Okay, so we're going to go to the next part. And again, you'll see a lot of it is a repeat. If it's a repeat, you'll see me going a little bit faster and moving on. So, to evaluate business process effectively, you need to understand structure, operational mechanics, role, responsibilities. So, within this, we talked about this already, the procurement process flow. So, from a system, the system, the steps that you need to take to approach it systematically are need identification. So, when an individual or department identifies a need for goods or service, so we talked about this in the context of inventory control, that somebody is monitoring, deciding that purchase needs to be made. This involves assessing current inventory levels. You need to know how much you've got on hand. But that's not all you need. You also need to know what would be our future needs based on operational demands and uh, other items, economic factors, economic projections as to how the economy is doing. Or if you know there will be a need, a seasonal need. For example, you may sell a lot close to Christmas. So all of those things are taken into account at this particular stage. Next, the vendor selection. So remember, we talked about the purchasing department, and the purchasing manager is responsible for actually going out and buying the stuff. And that is the responsibility of the purchasing department. So we did inventory control in the first one. So in the uh, purchasing department, the purchasing manager ultimately has to select vendors. Who should you be buying the stuff from? Uh, Look at their reputation, that you have dealt with them. Are they reliable? Are their prices competitive? Do they give you the right quality? Do they deliver on time? If something goes wrong, how's their service? So all of these things go into this vendor selection process, and often at times, not always, but often at times, you will get competitive bids. So if you don't know exactly what the price is, depends on what you're buying, you may need to get 3 or 4 bids from multiple vendors. So purchasing department manager or purchasing manager has to ensure essentially these items. That you're getting a good price, the right quality, it's being delivered on time, and if there are issues, there's service there, and you will take into account the integrity and reputation of the vendor in general. That it may be that they may be a good vendor, but they're about to go bankrupt. You may not want to buy from them because if some issue happens, you may not be able to get any help. You may not be able to return an item. So typically, companies will maintain a list. So for vendor management, you obviously, we just talked about these things, these are due diligence. So what the company will do is typically maintain an approved vendor list and update it periodically. You're saying regularly updated, periodically they will update it, but you are not likely to be updating this or doing completely new vendor selection with each purchase. Unless the purchase is new or it's something very critical, very large quantity, uh, once a routine is established, you typically stick with your established vendors, but periodically you will go in and see, make sure, are they still giving us the best price or are we having any other issues or not? And just message me if you have any questions. So, purchase requisition, creation. When the inventory control department identifies a need, they will basically prepare a purchase requisition. So, purchase requisition is an internal document, it's not something that gets sent outside. They are going to send this to the purchasing department saying, we need these goods or services, quantity needed, uh, what type. So I need, for example, wood, lumber, 2 by 4 by 8. So 2 by 4, 8 feet in length. So the specifications, and maybe I need it to be pressure treated, whatever the specifications are, and why we need it, and why we may need it would be just based on future forecast demand and current inventory levels. And next, again, we basically talked about you'll have a purchase order being created off of so purchase order is created based on purchase requisition, and at this point you will decide on the vendor, you will decide on exactly what you're purchasing, how much quantity, what the price ought to be, when it's expected to be delivered, payment terms like, okay, we will get a discount if we pay it in 10 days, or we are allowed to pay you in 90 days, whatever, any special conditions or requirement, that's all going into the purchase order. But main thing is, this is when you're selecting the vendor and putting in the quantity and agreed upon price. So the purchase order is physically sent, whether it's sent electronically or by mail or whatever, it's sent. That's the document that is officially sent to the person who's selling you the stuff. And needless to say, you will now track, communicate. Eventually, you're going to get your delivery So supplier delivers the goods to your warehouse. Receiving department will do certain uh, verification activities. So they are going to make sure that delivered items are compared against the information on the purchase order, and they're going to make sure the right items were delivered. They typically themselves will not match the quantity. They are not going to know exactly, or they should not know exactly the quantity on the purchase order. So yes, they receive a copy of the purchase order. When you send the purchase order, you obviously had to tell your supplier the quantity, but the receiving department generally should not know what the quantity is. So when they get a copy of the purchase order, the quantity box is blank. They should count it, enter it, and either the computer system will automatically determine we got the right quantity or not, or at the later stage, accounts payable will not pay the vendor for quantity that was not received. Obviously, if you got too much, you will initiate some sort of a return. So, just from a control perspective, uh, when you are paying accounts payable department, they are supposed to ensure that a couple of things are matched. Let me that the invoice. I'm just going to make a little bit of that the invoice is received match, and what should it match? It should match purchase order, it should match receiving report, and what are you trying to match? You're looking at quantity. We got the right amount when we are paying, right? We got it at the right price and whatever the payment terms are. So this verification is known as three-way matching, ensuring invoices that are sent, invoices we receive from someone else, invoices that we are getting are accurate before we actually pay them. Invoices $700, no, you don't automatically pay because they may have made a mistake. And that's all we're talking about up to this point. So we're going to talk about now internal controls next. I've already been talking about these, and this is again covered in great detail in an auditing course. So organizations can mitigate risks through effective internal controls, and the type of controls that we're going to be talking about: identifying employees typically responsible for each control activity is necessary for segregation of duties. And another thing you do when you are in an automated environment, in a computerized environment, a lot of these internal controls are built into the software So, in a manual system, you really have to maintain segregation of duties. You still need to do that in an automated system, but it is okay for the computer to perform two incompatible functions, because a computer is not likely to just commit fraud because it wants to. So, it's just something sort of to keep in mind, that uh, the computerized controls which are built into the software, they are internal controls, and they can alleviate the need, reduce the need for maintaining a lot of other or extra controls. So typically, especially in a manual system, you would need to ensure proper segregation of duties. And let me just sort of move on. Okay. So what can happen when you're trying to purchase something? Many potential problems and issues. First is your purchasing department manager goes out and buys stuff which was not authorized. So, who authorizes him? Through the purchase requisition internal document. He may go out and buy unauthorized, or claim that he's purchasing things, but they are actually fraudulent. So you need to have proper controls to ensure that these departments, like the purchasing department manager, cannot just do what they want, and uh, obviously huge amounts of financial loss and reputational damage can occur if these controls are not maintained. Other things that you're doing at this level, you're always living within a budget. So you want to make sure that you're following your budget. You're not exceeding it. Sometimes you do need to exceed it. If you're exceeding it, it is being done with proper management approval. And an example of not exceeding budget would also be, uh, for example, you could exceed the amount of balance you have in your checking account, right? So, if you don't have proper controls, somebody is not looking at it, that you could end up spending money that you don't have. Supplier performance issues. Supplier was in the past great, now they're taking you for granted. Now something is happening on their end, and they are not delivering uh, items on time, or now they're giving you substandard quality, not the right quantity. And again, you just don't know. All sorts of issues can occur, and this is one of the things you need to monitor. And if your forecasting models are not good, your demand obviously is going to be off. So, in here, we talked about risks. We are trying to eliminate or minimize those risks by actual controls. So, segregation of duties basically means that no single individual has complete control over these transactions. No single individual has complete control over multiple phases of transactions. Instead, these are divided up amongst two, three more people. So you're doing this to ensure that no one can commit fraud and then hide it, or somebody makes a mistake and nobody catches it. So errors or fraud, somebody by segregating duties, somebody is doing one thing, then somebody else is checking on it. You reduce the likelihood of errors. You also reduce the likelihood of fraud because uh, if somebody does commit fraud, they will not be able to necessarily cover it up. You'll be able to identify, okay, fraud occurred. Yes, it occurred, but now after the fact, you may be able to identify it. So we have different types of controls, including what we call preventive controls, detective controls, and corrective controls that deal with these issues. But here you're trying to prevent, and if you can't prevent, then at least detect it. That's what's going on with segregation of duties. Specifically, person who requests purchases should be different from the person who approves them. The individual that approves purchase orders should not be the one who receives them. Employee who receives good should not process payments. The person who processes payments should not be allowed to authorize payments. And the individual who maintains data, master data, accounting records, should not be processing purchase orders. And here we are talking in a manual system. Um, a lot of the stuff, as I mentioned a few minutes ago, in an automated computerized environment, you don't need to worry as much. So aim is to create a system of checks and balances where each person's work is verified or checked by someone else. So it makes it more difficult for an error to happen. Errors are unintentional or fraud to occur, which fraud is, of course, intentional. I think we are okay over here. We already talked about approved vendor list, uh, vendor master file controls. So you are thinking of master file as a database. So vendor database controls. So if you have a vendor database, you need to have strict controls over who can create a new vendor or modify vendor information in the system. So very simple example would be I want to rip off my company and I end up creating a fictitious vendor and then payment gets approved to this fictitious vendor. Or it's a real vendor, but I go in and I change the address of this vendor. So instead of the payment going to the vendor, it gets sent to my address. Minor things, but again, what we mean by master file controls is basically vendor database controls. Wherever you have your vendor record stored, data stored, what type of internal controls you should have over there. So periodically, you would want to make sure the vendor actually exists. It's a legitimate vendor. Again, there's always a risk that a fake vendor was created and you're buying things from a fake vendor. So you would normally get some information such as either social security number, which is not too frequent, or a federal tax ID number from the vendor. So usually when you're dealing with vendors, they're larger companies and they will provide you with their federal tax ID number. Um, All right, so purchase order. This is what you are sending to your supplier. That controls. So implement structured approval process for purchase orders based on dollar threshold. So if you're buying a lot of expensive items, large dollar value items, high value purchases should require higher level of authorization. Small quantities that you're purchasing for small dollar amount, um, uh, obviously a lower level is fine. Budget controls. Verify that sufficient budget exists before approving purchase order. In other words, you are allowed to buy this. You have enough money in the budget. You are not going over the budget. And there are times that you do need to go over the budget. So in that particular case, someone higher up should be authorizing that, yep, we have no choice. We got to exceed our budget. You want to use pre-numbered purchase orders. So basically, you want them to be numbered. You want them to be numbered sequentially. This is so you can make sure all purchase orders are accounted for, and to make sure that you do not have a duplicate purchase order. So you use pre-numbered purchase order, make sure there is no purchase order missing, and also at the same time making sure you don't end up with duplicates. So the risk is either a purchase order, a real purchase order is missing for some reason, or that a fictitious purchase order was created, um, again, or a duplicate is used for unauthorized purchases. And we've already talked about getting competitive bids, pricing from multiple vendors. And I'm gonna just go up to this, so another maybe couple of minutes, and then we'll end over here. We will go through this in the next class, which will be in 1 week. So when you're receiving the items, what do you do at that time? There should be independent receipt verification. Receiving personnel should verify delivery. So when the stuff comes in, they need to open up the box, make sure they count what's inside, and they need to do it without seeing quantities, invoice quantity, so that they actually make an independent count. Otherwise, there's always the risk that, oh, it's supposed to be 12, I'll just put down 12, receive 12. And you may not have received the entire quantity. So, without seeing quantities, inspection procedure, they should look at the items to make sure they are not damaged. They may not be able to fully verify quality or condition, but at least visually inspect that there's no outright damage. Sometimes you are required to tell the shipper right then and there for them to honor damage which might have occurred during transport. So this department, the receiving department, will then create basically a report or enter this data into the computer system where they will indicate what was received, the date it was received, who signed for it, and quantity, etc. If there was a damage, etc. And then as soon as it's done or goes through receiving, it should immediately be transferred to the warehouse, a secure storage area, so items are not damaged accidentally or somebody doesn't steal them. All right. So I think we're gonna stop at this point now. And Wednesday there is no class, and then we will continue on next Monday. Questions, let me know. Otherwise, I'll see you next Monday. You are going to work on your own. No Zoom session on Wednesday.